So that's a very interesting distinction that you make, that because you're a long-term real estate investor, retail or let's say individual investors are more inclined, or you have a closer bond to them. What's interesting about that to me is because I've always thought it's the exact opposite, actually, that it's institutional capital that is looking for, insurance premiums today so they can pay out in 30 years. Whereas retail investors, if you'll allow me to use that term, high net worth individuals, they want income today. And I know you do a lot of ground up. They want income today in terms of preferred returns or some kind of dividend. And they want to know that in 3 to 5 years, they're going to get that money back in case they need it. So tell me more about what long-term means and address that contrast, if you like.
So your general perception on how the differences between the two is very accurate. I think generally speaking, an insurance company, a pension fund, what we call permanent capital sources in our universe, they are very long-term oriented and probably more so than an individual. I think what I'm referring to more than anything is that when you're building a relationship with an individual, not to say that their objectives can't change, not to say that their life circumstances don't change, but generally they're investing today so that one day they can retire, whether that's 10 years down the road, 20 years down the road, 30 years down the road, and they're willing to, in a good strategy, kind of stay the course if they trust you and if you've done a good job for them. A lot of these institutions, some of them obviously have very long-term permanent strategies, but they also are more prone to reallocating, rebalancing. One day they're looking for development, the next day they're looking for something different as they round out their overall portfolios. So it's a little bit less about the nature of the length of the investment and more so around how one manages their investment. I always make the joke internally that, nobody's waking up in the morning thinking about their asset allocation. Well, that's what a pension fund manager does pretty much every day. And then they'll spend all day with their team talking about their allocation and what they need to do to tweak it. And it's first top of mind. Whereas for the individual investor, it's more of a byproduct. They have a day job, they go to work. They don't want to worry about these type of things. They allow us to worry about these type of things for them. And I think that it just fits with the infrastructure that we built, which is maybe a different point of discussion, but we set out in the early days to build an infrastructure, a team of people that can deal with individuals rather than institutions. And we have institutional capital, so we have a group that deals with that capital, but it's a completely separate group, a completely separate requirement that deals with our individual investors.